at the beginning, before you joined Morgan Stanley, what did you think your career was going to be? Like, was finance always the plan?
Yeah, finance was always the plan, really since undergrad. To be quite honest, I got turned on to finance by watching the movie Wall Street in 1985. So, I love the pace of it. Yeah, what's ironic about that is that I think Oliver Stone, his goal when he made that movie was to turn people off to the moral pitfalls of finance. But it actually had the opposite effect. A lot of guys my generation got fired up to work there. And so I became a finance major in undergrad. Coming out of undergrad, I just kind of wanted to get my foot in the door doing anything related to finance. It was tough for me to break into the institutional business. I knew I'd probably have to end up pursuing an MBA to do that. So I worked as a retail stockbroker for 2 years. Then I worked at a buy-side firm, really in the back office, really kind of the lowest of the low in terms of, where you start, right? So really starting, on the ground level, so to speak. But that sort of, I kind of knew that I just wanted to have things on my resume that I could eventually spin into something that told a story of how I wanted to get to the institutional side of the business. So for me, I knew going into business school 4 years before I even got to business school what I wanted to do. And my job right before business school, I was working in the back office for an asset management firm, had ran like $24 billion. So like worked in the cage, basically. I got promoted to like portfolio manager's assistant, really just more of an administrative type of role. But there I really got to see what institutional salespeople did, right? I'd see them like escort Ted Turner into the office. And I was like, that's what I want to do. Like I took their calls and things like that. And, I just felt for me that job was going to be a good fit. And so I got to Michigan and I hit the ground running, and I did a bunch of informational interviews, sort of first year in. I think I was sort of ahead of the game from that perspective. But, I think important to note that, those first couple of informational interviews I did were painful. Like, they were, nothing short of kind of embarrassing yourself. You don't really know anything, and but that's kind of how you do it. You kind of make a fool of yourself, and you get dinged up a little bit, and your story gets tighter, and you get better and better. And so, by the end of the first year, by the time like Goldman Sachs and Morgan Stanley had come to campus for a summer interview for a summer internship, I had made all those mistakes, and I kind of knew what was ready for what, I had prepared a lot and practiced a lot, recorded myself answering questions, things of that nature.
Yeah.
So I ended up getting an internship, at Goldman Sachs that summer, in fixed income, and then ended up getting a full-time offer from both Goldman and Morgan Stanley as full-time roles. One was in equities, one was in fixed income. So I took the role at Morgan Stanley in equities. So that's sort of the background. But to answer the question in terms of like, what did I think my career was going to be like? I'll be honest. I initially thought when I started that I was going to be like a sales guy. Like I was going to be a client person, a relationship person, and that's kind of what they had me pigeonholed for me. Like they're like, oh, good personality, nice kid, athlete, he'd be very popular on a desk, like that kind of thing. And about a year in, I realized that what I really loved about the business wasn't so much the client stuff. I mean, I was pretty good at that, and clients did like me and stuff like that, but it was really the markets part of it. It was the analytical part of the business, like getting to know stocks and pitching stories, getting into the weeds on things, understanding the value of information, what portfolio managers and buy-side analysts wanted to hear from me. They wanted incremental information. They wanted market color. So, I spent the next 2 years kind of getting smart, and I got promoted to like the tech specialist sales desk. And I think the interesting thing about, finance and sales and trading or banking, whatever the career is, it's kind of your third year when, you see careers kind of diverge. You see people who are like really aren't going to make it. And then people kind of really move up. You see them moving up the ranks, right? It's like year 3. That's when you see like the separation between people, I think. So, so when I got to the tech sales desk, that's like, you're really more of an analyst in that role, right? Like you're a specialized institutional salesperson. And that was really a great fit for me. I mean, I love that. I love the fact that I was like kind of an analyst. I was really an analyst, but in the sense I didn't have to publish, but I could be a product specialist, and people came to me to, for information and to understand things. And like I was internally, you're like the go-to voice on technology, and externally, clients value your opinion a lot because you know what you're talking about, right? And then, interestingly, what happened during that time, this is like the early 2000s, right? And what happened was like the information game had changed a lot. Like a lot of clients at that time were getting a lot of their incremental information from Asia, like from the supply chain and technology. That's where like all the information was coming from. So my boss had the idea that they wanted to send somebody to Asia to kind of, close the gap on the information and really create a relationship with the Asian analysts over there and kind of feed back the information back to the US and cover clients from there and all that. And frankly, I got the opportunity to do it because I was probably the most willing and able to do it. Because I think all the other guys had, were married, had kids, and lived in Connecticut. I wouldn't say I was necessarily the most qualified guy to go move to Asia. I'm a Cuban guy from New Jersey. I mean, that doesn't, not necessarily the guy you'd send to Hong Kong. But anyway, that was like the opportunity of a lifetime. It worked out tremendously. It really changed my life. I went there, and it was I was really my mouth to a fire hose in terms of the learning curve, because I knew tech a little bit. I mean, I'd been doing tech for a couple of years, but I really had to know Asian tech. And I got in there. I was supposed to be an Asian tech specialist. I knew nothing about Asian tech. So, Morgan Stanley was very patient. They gave me a long leash to kind of learn. And I was going on, really just going out, seeing companies all the time, and, really built the franchise for myself as an Asian tech specialist at Morgan Stanley. It was really, for me, that was like exactly the job I had wanted to create for myself over the years, right? To be a sales guy, but to be an analyst, sort of a hybrid analyst, but to really be somebody who provided value in terms of incremental information, like putting the mosaic together for clients. And so the path to, equity research from there, and then to the buy side, was all very much a natural transition at that point, because you're ultimately you're covering your clients, and you either can, at that point, if you're like an executive director level, your path is either, okay, I want to be a manager at the investment bank, I want to run the sales desk, or do I want to eventually go to the buy side? That's kind of the thinking most people have, right? And the buy side, sort of the holy grail, supposedly, if you're in sales and trading in terms of where you want to end up. But has a little bit of people have a little bit of a Pollyanna view of the buy side. They think once you get there, it's great. You're just picking stocks, but you're the P&L pressure. It's like that doesn't go away. I mean, you go on vacation, it's there. It's Sunday, Christmas, it's there. Like you have positions on, and that never goes away, and you live the rest of your life like that, basically. So yeah, for me, it was a natural transition. My goal really, so I took a job at Jefferies in more of a managerial, research role at Jefferies, and then for me, I kind of made the decision, that's not really the path I want to take. I don't really want to go sort of the managerial route at a bank. I want to make that transition to the best side. So I took a role in equity research, which was a good role for me. I got to head the Asia Semiconductor and Hardware Group at Cantor, kind of carve out my own path there a little bit. And then, eventually the opportunity came up. My boss at Cantor got the opportunity to run the business in Asia for Eastmore. Took me with him. He was doing more of a special sits role. I was sort of an analyst PM, giving him ideas. Eventually got my own book. And then I sort of outgrew that place. And then eventually at Walleye got a bigger book. And have now, decided, I did the multi-strat platform thing for a while, managing a lot of money. But this pace for me, helping build a business, is kind of where I want to be, right? It's comfortable. I mean, it's comfortable as working out. It's comfortable as comfortable as working on the buy side can be, right? So, it's by no means cushy. You're never comfortable. You're never. You're always sweating.
And this
doesn't matter.
You've just set up a great table of contents for the rest of the conversation here. So I don't want to get ahead of ourselves. We're going to go through each of these chapters that you just mentioned, but this was great. You're a Cuban guy from New Jersey, getting an offer at Goldman and Morgan Stanley, going to Asia, career divergence, talking about some of the creating the job that you're looking for, equity research, buy side. I want to get to all that, but I want to return to something that you said a minute ago, which is just a very funny hook to me, that your why finance was the movie Wall Street in 1985.
Yes.
And if I'm remembering correctly, Wall Street says greed is good. When you went to Morgan Stanley, was greed good?
It was better than it is now. I just think generally, I think generally the culture in business, has changed a bit. The sales and trading environment in the early 90s and even into the early 2000s was it was a little bit of kind of a locker room type of environment. Lacked polished. And there were less rules, frankly. A lot of there was just less rules. Not that you're necessarily doing anything that you shouldn't be doing, but it was a different environment. I think that institutional salespeople then, the way you really added value to your clients, it was just trying to get like an incremental piece of information, right? Where and by that I don't mean like insider information. I mean you're sort of helping him paint the mosaic a little bit better. You can sort of sense changes on the margin with your analysts, or you hear a piece of information that it's not necessarily priced into the market, whatever it is. Whereas now there's much that's much harder to do nowadays. It's like it's so regulated, and the institutional sales role has changed much more to a sort of an account management type of a role, where you're really kind of feeding the resources into the client, rather than be sort of a stock jockey type of thing. So I think at the time, that type of Wall Street mentality of, and that's really what that movie's all about, right? It's like getting, the most value commodity I can think of is information, right? Like, and so that's kind of how we were brought up, right? And, but that's certainly changed. But at the time, it's there was value in that, right? So.
It's funny to see how quickly and how much it's changed. And I don't have a background in sales and trading, as I have a background in M&A and a background in private equity, but it's going back and watching those movies, sometimes it's like it feels very different than the Wall Street that I grew up on and cut my teeth at. But some of the pull is the same, like that idea about like the competition and like always striking to get an edge and pushing yourself as much as possible. And so what was like the fundamental pull that got you towards it? Was it the intellectual thrill of like dominating the markets? Was it that you were competitive and you wanted to have like the top performance and see that performance in real time through sales and trading? Or was it just practical? Like, hey, this is a great place to start your career.
It was a combination of the two. I think for me, and I'll say this about sales and trading in general, which we've talked about in the past, is that it's very much the thing about sales and trading is that you're very much in the middle of it, right? It's the most it's the closest to the action you're going to get. So like if you look at sort of the pantheon of careers in investment finance, so to speak, not so much working in as a CFO or something like that, but you have your private equity, you have your private wealth, which is basically, managing money for individuals. You have your institutional investing, whether that's private or it's hedge funds, or it's investment banking, which is very sort of high level transactional, at a very high level transactions, or there's sales and trading, which is, you're in the mix. You're the closest to the markets. You're actually, you're executing on behalf of clients. You're taking orders. At times you're moving stocks. Which is an amazing feeling, right? When you're pitching a stock and all of a sudden you're covering big accounts like SAC or, that was, which is now 0.72, but which was SAC at the time, or Andor. These are big tech hedge funds at the time. And I remember, pitching them a stock and then seeing the thing go up, 9% in 10 minutes. And that's amazing, right? Like you're doing that, right? So it's the instant gratification, wanting to be closest to the action. And if you're somebody who kind of thrives in that environment, right? If instant gratification, the things that come to mind is like, if you're, obviously an athlete, right? Because you know right away how you're doing. You get that instant gratification, immediate feedback, or you're like, you're even an actor, right? That's where that to me is what always kind of inspired me and what I always liked about it. From a practical matter, obviously I knew the money was good, so
the money's good.
That always matters. But I think. So yes, I think it was that sale for the moving into sales and trading thing. That was really kind of what appealed to me about it, and to this day, I think is still what is appealing about it. If that's what your thing is.
For sure. And you spent almost a decade at Morgan Stanley, right? And so at that time, I bet that just laid an incredible foundation, because obviously Morgan Stanley is one of the very best banks on Wall Street, especially in sales and trading. And so what did you learn from Morgan Stanley that you're still relying on today? Like, were any of the principles that you took from that still important, or was it mostly stuff that kind of just became less useful over time? Was it like technical skills and things?
Yeah, I mean, look, I think if you work at a place like that for 10 years, you never get that drilled out of you, right? It's like being in the Marines for 10 years. And I didn't realize this till I went to a couple, sort of second tier banks later in my sell side career. I always knew it was a great place and a special place, but the quality of the people there, the quality of the franchise, and what's expected of you, right? And so you just kind of operate, with a higher standard. You have your work ethic. I remember the first year there, first year in any role in finance, whether banking, whatever it is, you're going to get your butt kicked. It's brutal. You don't know anything. You don't feel smart. You feel kind of useless at times, but you gotta really power through it. Because once you do, you're hardened, and I just think back of the guy I was, the employee I was, the type of work ethic I had, and not that I worked hard, but now it doesn't matter what I'm doing. If I'm helping somebody sweep up after something, I'm always timing myself, it's just that kind of mentality. Being at a place like that for 10 years and surviving and thriving there 10 years. It's a standard it creates for the rest of my career, certainly.
Yeah. And I've noticed that too. I think that a common misconception in finance is that you rise to the level of your own personal expectations. But in reality, I find that people rise to the level of expectations that the firm has of them, the people around them have of them. And so I've had good analysts who in the wrong spot don't do that well. But when someone really takes them under their wing and they say no, we expect a standard of excellence here. We really expect you to perform and do a good job in this bank. Then they'll work that hard and they'll do that. And I noticed that in some of the firms that I've worked at, some of them had lower expectations of them, some had higher expectations. And I usually was exactly what they expected me to be.